$114 in the early hours of this trading session. That is today, the 29th of September 2024. It announced its earnings outcomes, and they were better than expected, or rather really good. Maybe not better than expected, but they were good. Market participants shared that. We have seen gains of more than, definitely more than, I would say, close to 20%. We know very well that the stock got this rejection at around $153.75. This was late to late June, mid to late June of this year, and since that time, the last time we saw anything that looked like what we're facing today, that is. Okay, well, what we're facing, what we faced yesterday after yesterday's post-market session and today's regular session was all the way back in on the 19th of August, and they also got a rejection there. So we have, if it manages to close above this current price of around $108, then that's really good. That's really good. There's an upper projection it still has to surmount, which is $110. $110, and then there's even 126.39, and we have been able to determine that the probability of it surpassing this 126.39 is actually a very decent probability, a decent one. It's at $84.113. We used eight closing, 8 4 hourly price points to determine this probability. The probability that it will surpass 126.38 is 84.113. But it doesn't mean that that will happen. It doesn't mean that that will happen. But it just tells you what's in there. It's just largely down to the fact that the stock it has actually traded higher. I mean, it has traded higher prices than even that. As such, it lends to that probability. So it also encourages. It will be an encouragement to market participants and indeed the algos that this is not a problem. This is not There's nothing scary about such levels. But we have to monitor closely and see. There's a bit of a decay right now. I think the prices are this the broader market. Things have There's some selling off occurring right now, but it will be good if it closes above at least $108. That it will be it will help a lot. It will help a lot. At least it has been able to surmount its most upward resistance, which is that $108, 100 roughly $109. It hasn't been able to do that. It hasn't been able to close above that since like I said, all the way back in the middle of August. But yeah, 181% that it can actually print surmount, as a matter of fact, $126.38. Yeah. So just see what you make of Micron stock, and I'll continue to update you. Thank you very much for watching this video.
The following analyst note is from Morningstar by William Kerwin. Micron's quarterly results came in at or above the high end of its guidance ranges, and its November quarter guidance beat their model. The firm benefits from a broad and strong upcycle in memory chip demand, aided by AI-related demand. They believe this upswing should continue through calendar 2025. Still, they expect growth to decelerate through 2025 and forecast cyclicality for Micron in the long term, which informs their no-moat rating. Micron stock has been seeing downward pressure since its last earnings report 3 months ago, with a number of analysts' downgrades citing concerns of oversupply in DRAM chips. They don't share these concerns in the short term and believe Micron's strong guide aligns with their view for tight supply to fuel another year of strong growth in fiscal 2025. The market responded positively to guidance, with shares up as much as 14% after hours yesterday, the 25th of September. The stock is now trading close to their fair value estimate, August quarter revenue rose 93% year over year and 14% sequentially to $7.75 billion. DRAM continues to drive Micron's results, but DRAM and NAND showed more than 90% year-over-year growth as these markets recover from the steep cyclical downturn seen in fiscal 2023. They believe DRAM growth is broad-based but supplemented by robust demand for high-bandwidth memory chips that serve AI applications. HBM is still a small minority of total revenue today, but they forecast it to rise above 10% of Micron's revenue in the next 2 years. November quarter guidance was impressive, implying 12% sequential revenue growth and 300 basis points of gross margin expansion at the midpoints. They believe growth will be driven by growth for shipments and pricing in fiscal 2025. Rising prices also contribute to their expectations for meaningful margin expansion in fiscal 2025.